Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, and we are looking at the Dow Jones Industrial Average showing a very slight gain on the day. In essence, unchanged, closing up about 4 points on the day at 18,533. Standard & Poor's also eking out a small gain, about 0.1% at 2177. But the NASDAQ traders is trading at a new record historical lifetime high that really hasn't been achieved since about 2001. We'll try to take a look at a NASDAQ chart. It's quite interesting. And then lastly, crude oil. Let's go ahead and pull that up. That is trading lower today, off almost 0.6%, 42.77, down about 25 cents a barrel. So traders, I think it is appropriate to start to show off by looking at the NASDAQ. Of course, as we spoke about just a few seconds ago, the NASDAQ has gone to a new lifetime high. And unlike the Standard & Poor's 500 or the Dow Jones Industrial Average, which fluttered with new record highs last year and then reached them again this year, the NASDAQ hasn't even, well, it's been close, but it's really been on this upward trajectory since 2008, but has not exceeded the record highs and lifetime highs that were achieved back in 2000. Now, to really even look at that, we need to be looking at a monthly chart. This is a monthly chart. Each candlestick represents a month. You can see the record intra-month high, but in terms of a closing basis, and that's what obviously people go by, you've got, and I'm going to try to put this as strongly as possible, but you can see that's the actual closing high on a monthly basis, but it hit this high. This was back, of course, in 2015, came back down, so it's just broke above this high, which is what's giving it that new record high. But traders, look at that. This market has just really come into its own over the last couple of months, 2 months specifically, to get to this point. Now, traders, yesterday I spoke briefly about a pattern that is simply called a scouting party. And the scouting party, this pattern was created and coined by Steve Nissan. And as I said, although it's not a candlestick pattern, it is a pattern that's based primarily upon market sentiment, which is what candlesticks draw so much from. And in essence, what it is looking for is as a market goes to a area of resistance or support in which the market has had the inability to break above, or in the case of that low, break below, the scouting party is simply a candlestick in which, or it could be a bar chart, but it's simply a day's activity in which the market closes slightly above the former resistance, but not really strong enough to have that kind of a breakout scenario. And then what Steve Nissan believes is that it's testing the fortitude of the bears here. Bears were unable to take it down. And so now what we look for is what's called a beachhead. And a beachhead is simply going to be a series of open and closes, the bodies of these candles that are trading above this line. And this line, of course, represents those historical highs at 2171. In short, in essence, what we're saying here is that it does appear as though the market is consolidating and should move higher. If we get that kind of a move, as I've said before, my mark is 2200 on the E-mini Standard & Poor's 500. So traders, the next market that I do want to look at today is the dollar index. Dollar index down about 0.25% right now, and it's trading at 96.15. We're looking at a daily chart in which I have one basic fib retracement. This fib retracement that we're looking at comes in from about 93.80. It's this bottom here up to this top, and when we do that, we get our various areas. The 61% retracement area comes in right here on this line at 96.35. Of course, market came up fairly solidly, hit this particular line, and now appears as though it's bouncing back off. So I'm going to look for a little bit of weakness to come into the dollar over the next couple of days. And then, traders, lastly, do you want to take a quick look at crude oil? Crude oil down nominally, down 0.63, so about 0.6%, down 27 cents per barrel. But as I said on yesterday's show, as well as previous shows, my sense right now that we've definitely seen that bounce, and that bounce, of course, came in roughly at 39. If we draw, this is 38.93 right here, so call it $39 a barrel. We can absolutely see the support. We've had this market really move very, very strongly to the upside on some saber rattling by OPEC. However, some numbers came out stating that there's still a vast oversupply of oil, so that's putting pressure on it once again. As I said, I believe this market will trade sideways to lower. I'm looking at the upper level and area of resistance still at 44. As you know, our initial target was between $44 and $42 per barrel. It certainly hit that. Once it broke through that area, as you recall, we went to this next level, meaning $39 a barrel. We found the definitive support in that area. It has bounced it back up, but I really think it's almost a dead cat bounce in that we'll see this market move back up and then track lower or sideways from here. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.